Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with Arise Mortgage. Grab a bubble tea and enjoy the episode.
How's it going, everyone? My name is John Lee, and welcome to another episode of the Asian Connection Mortgage Podcast. Today, I want to talk to you about tariffs and Canadian election that's coming up and how all these things are going to impact mortgage rates. So what's happening with the economy right now? Well, the buzzword right now is Donald Trump and tariffs. This is something that we've never really had too much experience with. Now, there's the agreement within North America and that there's free trade. And then now that he's president, he is not happy about Canada and how he's saying we're ripping him off. So therefore, he wants to put tariffs on Canadian goods. So that's one thing that's happening, pretty big. And maybe he's bluffing, maybe he's not. No, he's been announcing it and then he pulled it back and now he's implemented it again. So I don't know, he seems like very flip-floppy. But because of that, it's getting us making sure we're on our toes and getting ready for it, and also creating policies to see if we could uh, make sure that we're protecting our trade, and so that if they're gonna put tariffs on, then we're gonna put tariffs on them as well. So the second thing is we currently have no government that's working because the current government liberals, they decide to shut down government until they have assigned a new leader for liberals. And very likely is that they're going to call an election when they figure out who their leader is going to be. So these two huge things, how are they going to affect the Bank of Canada's decision moving forward? And I would say the general consensus in the market is that things are going to be going down. And I personally think I agree with that. But no, I think what the challenge is like, okay, well, if it's going down, well, how quickly and how much? So I have clients who are getting mortgage right now and they're asking me, so should we go fixed or variable? And with all of these political things that's going on affecting the market, all these uncertainties, how is it going to affect all these rates? So here's my take. So with the tariffs, what's going to happen is that it's going to cause things to be more expensive for businesses, which can slow down the economy. And what's really strange is that uh, it prices will increase not because of more demand by consumers. So if there's a lot of demand, just simple economics, then prices should go up. But demands are the same, if not, maybe it's even lower. But because the input cost, meaning the the cost to put something together has increased, then therefore they have to then sell it at a higher price because the cost has increased. So that's one thing. So if prices do increase, then really the inflation should also increase as well. But because there's no higher demand, then people may buy less. So we really need to see the data for that if Trump decides to permanently implement tariffs on Canadian goods. Very likely, we're also going to be putting tariffs on US goods as well. So it's just not good for anyone. And this just slows down the economy, it slows down the efficiency as well. So likely Bank of Canada will cut rates to help things to improve. And if Bank of Canada decreases rates, that means variable rates will drop. We've also had the election as well, and the market is quite nervous about that because generally when a new government comes in, they want to spend and get people to be to have that popularity in the eyes of Canadians. So they're going to do a lot of tax breaks or government incentives, which again will drive up inflation. So all of these things is really difficult to really like balance how it's going to affect the Bank of Canada and all these rates. So what I think is that despite all of these things that's kind of pulling towards more inflation or like decrease in the economy and GDP, I think the Bank of Canada will decrease rates further to help the economy keep on running and to help borrowers borrow money uh, at a cheaper rate. So what might happen to rates? Well, there's a lot of factors that's pulling into different directions. So I talked about the uncertainties about the tariffs, the election, but new data has come out that inflation has actually increased in January to 1.9% for Canada, and it has increased to 3% in US for inflation in January. And also, there's also more good news about the unemployment rate as well for both Canada and US. So for Canada, it fell by 0.1% to 6.6%, making this the second consecutive monthly decrease. And as for US, man, their economy is doing so much better than Canada. Their unemployment rate in the US was 4%, and this was down from 4.1 the previous month. So their economy, the gap between theirs and ours is actually quite huge. So what do I think? Despite all of these, I still think that the Bank of Canada will still decrease rates, but it's not as fast or as much as what other people might think. What I think is that by the end of 2025, they'll likely decrease it by another 0.5%. So I would forecast a 0.25 decrease, maybe in within 2 months. And then in Q4 of 2025, we're going to see another decrease of 0.25%. This is great news for variable rate holders. And for those who are willing to take that risk, I would say within the term, you would be able to see more savings than taking a fixed rate. But however, here's the tricky part. It's because if you want a fixed rate mortgage, your rate will actually start off lower than the variable rate. So the upfront savings will be there. But after 2 years, by the fourth year or fifth year, we really don't know what the rates will be. But what the market is thinking is that, yes, you might be losing in the beginning if you take a variable rate. But by the fourth or fifth year, that's where you're going to make up for the on the savings. And that's where you're going to gain a lot of advantage by taking the risk, by taking variable rate. So what should you do? It really depends on you. Okay. So there's that risk, there's that stability. If you are okay with risk, I would suggest going with variable because you may be able to save more money as rates drop. And if you're anticipating that rates will continue to stay low due to all of these uncertainties. But go fixed rate if you want consistent payment, you don't want any surprises, and rates are not bad actually right now. So it's obviously not like 1% back in COVID time, but it's decent. And if you're okay with the monthly payment, go for fixed. You'll have savings probably in the first year. And after that, we're not sure, but at least you know what your payments are going to be. So in the end, really, there's no right or wrong answer. I know you hate this because, it's the whole it depends, but really, it does really depend on who you are, your budget, and your comfort level. Continue watching the economic updates. It's been so volatile, and 1 month the market would expect a rate hold or rate decrease, and then another month, though some may even anticipate a rate increase if inflation kind of gets out of hand. Keep listening to Bank of Canada and what they're saying. Uh, we'll see how the election and the tariffs unfold in the next few months. And just do your research. Ask mortgage broker, ask other professionals in the industry as well to get their thoughts. And I get it. There's so much uncertainty. It really seems quite overwhelming. But this is a really good time to take advantage of rate drops. Um, we we know that during uncertain times, this is probably a good time to buy because you don't have to fight for like bidding in bidding wars. You don't need to overbid. So this can be a good time to buy. There's quite a lot of inventory in the market right now. So if you are looking, you're likely to find something that you really love and to purchase it with subjects and with lots of negotiation room as well. So um, definitely take advantage of this, or else when things start to stabilize or things seems to be more certain, that's probably when more buyers will enter into the market. And that's also when you might see more demand and it might be a more stressful time. So there you go. That is my take on how tariffs and Canadian election might impact mortgage rates. Connect with me, reach out if you have any questions, and I'm happy to help. Thanks for listening, guys.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the Asian Connection Mortgage Podcast.